Hello, everyone, and welcome to our first investing workshop for this week. And first of all, welcome, and my name is Leonardo Hurtado. You can call me Leo. Right now, I'm team leader of knowledge management at the GFB. So for this workshop, it's basically a 30 minutes session and also an activity to introduce you to the reserves fund. And as you can see it, this session is related to the investing workshop and also around the investing finance and legal standard. And well, let's recap. These are the checklist of the finance and legal standards specifically for investing. Most of the topics related to this standard, it's for the reserves management, how do you plan, how you manage these reserves, also the different activities about it, the management, and also the return of the investments. Basically, for this session, we'll cover these three parts of this standard, how we can have at least one restricted reserve fund, other one unrestricted reserve fund, and basically how we can set or some recommendations around these funds inside your global compendium. The next working times will be talking about the rest of the parts of the checklist. And now for this one, it's around these three. So I want to explain first one, the differences between the restricted funds and unrestricted funds. So basically the first one, it's a reserves account, obviously contains money, and it's for specific purposes. The restricted funds provides reassurance to donors their contributions are used in manner they have chosen. Basically, you have a clear objective to use this money. And the unrestricted funds is basically, it's more general, it's flexible, so you can define this for different activities, but this money can be moved for other ones, or it's more moving forward causes instead of specifically purposes. So you will see in this graphic the ideas. So you have the unrestricted funds. You will have, for example, cause A, cause B, cause C, and then you can have the restrict funds, and this is only for specific purposes. So these are the main differences, but the management could be very similar between both of them, but the main differences are the purpose of this different funds. So how you can create a restrict and unrestricted funds? The first things, it's basically you can have these different questions before to create the funds. What will be used for? What's the amount that we want to for that fund? Where the funds will cover from? And if this money will be fixed in terms of a specific amount of money, or could be a percentage of the income from some resource. So here are some examples for restrict funds. Could be the first idea, the purposes could be you will have reserves or an amount specifically for emergencies. The other one could be for paying a fixed cost, just like the entities affiliation fees, mostly for this kind of things. The other one could be for debt repayment. So if you have a debt, you can design a strategy and how you collect this money, and then you will separate this amount of money and don't use for other activities, because a debt could be a critical risk in your entity. Also for legal matters, I don't know, for example, for the payment of a lawyer, also to cover the costs of legal representation in your entity. These kind of things are critical for the governance and the sustainability of your entity. So you can separate this money, and this money will not use for any other thing. And you will have the unrestricted funds. Basically, that could be for any of the reasons inside the restricted funds, but could be more flexible as operational activities, back office activities, investments. For example, I don't know, you will separate the money for the payment of their office services. These are important, but maybe in terms of the cash flow, in the, I don't know, in the first 15 days of your month, you can use this money for other operational activity, because you are sure that you will have the enough cash flow to pay the office staffs in the second half of your month, for example. So you have this separation of money, but it's open to move this money for different activities. Also, these amounts could be used for investments. So if you will do an investment for, I don't know, Google ads, Facebook ads, marketing, a different, I don't know, a leadership, these kind of things, you can separate this money because requires logistics. But in case, I don't know, the strategy changed, well, basically you can use this money for other activities. For example, merchandising, it's kind of this. So then once you identify the objectives and purposes, you can define the resource or the source that you will collect this money. Basically, you can identify how you can allocate the incomes of them to reach the financial goal of their funds. For example, for my restrict fund of reserves of emergency, this money will came from BD or donations. For payment of a fixed cost and debt repayment could be from our operations, because it's something that I don't know, my debt it's bigger than other things that I can spend, and my operations, it's also the biggest resource that I can collect my money. So I can take this money from my operations. For legal matters, could be the partnership donations also, because it's something that I can collect during the whole month, and legal matters, it's only once per year, for example, this kind of idea. So once you identify your objectives, you can define the source of how you collect this money. And also you can identify the amounts or percentages. For example, 100% of individual donations will be allocated for reserves and emergencies. Or you can define specific amounts. For example, 275 units, could be dollars or your currency, will be allocated from operations of the restrict fund, debt and repayment plans. So basically you take this amount, no matter the performance or your incomes, you will allocate this amount to this fund. Other one could be 20% of partners' monthly incomes will be allocated to the payment for the office rent, these kind of things and ideas. So basically, the main activity of this, it's just to recap the main differences of them, explain how it looks like. And the idea for these workshops, it's having a working time. So the idea is basically you can go to this spreadsheet and you can start doing this exercise. So in case you didn't have a clear funds, no matter if it's restrict or unrestrict, you can start work on this and having your planning. So on this spreadsheet, you will have the bank account amount. You can put the current bank account of your entity here. And then you can start defining different funds. There is some examples. You can add more in case you need it. Here is the amount that you want to put. The source, basically, where will be the resource of you will get these incomes. Could be BD, EWA exchanges, donations, other one. And if you will define if will be a fixed amount or percentage of income from the resource. You can do that from restrict funds and also unrestricted funds. Then you will see the grand total of your reserve funds and the percentage based on your bank account. So basically, you can go to this spreadsheet. I will put the link on the chat. You can go, please make a copy of this. So you can go to this. Duplicate, it's the option, and you will have the copy of this sheet and work on this. So in case you have any question or any doubt, just let me know. I will give you right now 10 minutes and then we, let's see the progress of their activity. Is that clear for you or you have questions? No questions? All clear? Okay, so 10 minutes, you can go to this spreadsheet and work on that. So time starts now. So, okay, here is an example. So you can use this as inspiration if you want to do this exercise later or in your time. So this is example. I have right now my bank account amount in $100,000, just for this example. So my objectives are this. I want to create the reserves and emergencies fund for restrict funds. So I don't want to use this money for anything outside an emergency. Then I have the entity affiliation fee, and I need to ensure that I can cover these costs. So also I had this under my restrict funds. Then I will have 3 unrestricted funds. The first one for operational activities, maybe the merchandising, the activities that my MCVP needs to do for sales, other ones, the back office activities, maybe my, for example, team days or capacity building for my team members, team leaders, or my local committees. And then for investments, I want to do investments in my products and also push better the new EWA products in my entity. So I need to do marketing investments. And based on my budget, for example, I had $15,000 for operational activities, 500 for back office activities, and 6,000 for investments, just for example. Okay, so then I identified my restricted funds and unrestricted funds. The amounts, it's very important that you set the goal of this. Then based on my reality, I had good operations or exchange activities, but also I had an increase of the incomes from partnerships development, BD, business development, and also for EWA products. So for reserves and emergencies, because this is an important amount, this will came from operations and partnership donations. So to build these emergencies funds, I will separate 10% of my incomes monthly from operations and $50 of business or partnership activities per month. Then to pay my fixed costs, because right now I have a boost in my EWA incomes, and this is not a higher amount, and I can cover this from my EWA products. So I decide 25% of my EWA incomes will be destined to these fixed costs for my, for example, entity affiliation fee, and I can make this secure because right now I had my a good performance of EWA products. Mostly of the entities right now had better performance from operations right now, but this is only for example. Then for operational activities, this is a bigger amount, and also because it's focused on my main operations, which right now are exchanges. Well, my reserves obviously will be exchanges. And 25% of my exchange incomes per month will be destined to build this operational fund. Then for my back office, because this is a fewer amount, will be from business development donations, mostly for conferences. So 50% of these revenues will be destined to this, because right now my conferences revenues, it's not a highest amount, and the other 50 could be destined for my not reserves funds. Could be for conferences, and right now it's not a priority from my side. Take this as based on your context. And then for investments, well, because this is very important and I expect to have a good return of investments, I decide this will be from my operations and also for other EWA initiatives. So for this amount, right now, because I want to delegate more of my operations for other activities, 10% will be destined for investments, and 30% will be of EWA incomes will be destined for investments. So right now, my total of restricted funds will be $50,000, and for unrestricted, it's $21,500. My grand total of reserve funds, it's $36,500, which is basically my 36.50% of my general bank account. The rest is basically for my regular costs and regular activities. So I want to ensure this percentage of my general bank account from now, and the idea is from my regular incomes to this reserves activities. So right now I have this clarity. So this could be a map or a plan to build my performance and also for my rebudget. For the second semester, I can identify different funds and how my incomes could be destinated for these things. I know it's kind of complicated in the first step for us, but doing this kind of exercises, or also if you have your own framework, it's very cool. But the idea is that basically identify different restricted and unrestricted funds, identify the amounts, the source, basically where these incomes will came from, and the percentages or amounts that you will destinate. Could be monthly, bi-monthly, per quarter, semestral. That depends on your own context. But basically, you need to set and being clear of this, because if you don't have in mind the amounts that you will destinate for your research funds, basically, and the performance and the results to reach these amounts basically will be complicated, because if you didn't measure this management, basically you had nothing of this. And it's a high an important recommendation to have your research funds, because some activities could be critical, and you need to ensure that you will have the money to cover this different things. So let's go back to the session, the slides. Just to recap, be sure to know the differences between restrict and unrestricted funds. The restrict funds is basically money that you will don't move from other activities because they have a specific purpose, and unrestricted could be moved inside these funds, and also you can move this money to other unrestricted funds. Identify which are the restricted and unrestricted funds in your entity. Identify the source of incomes of these funds. Create a method to collect those incomes, deciding if there will be a fixed amount or percentage. And finally, and this is a very important recommendation, mostly for the fixed, restrict funds, to have these protocols legislated in your global compendium, so you will have this accountability to your national plenary, also for your rest of your MC team. And basically you will have all the methods to use these funds and also to apply or basically use them. So yeah, basically that's it from this workshop. You will see in the description section the link of this framework tool that we use for this, in case you would you want to use to do this exercise later. So thank you so much, and see you in the rest of investment workshops.